All right, so here we go. All right, well, good morning, everyone. Thank you so much for joining us. We sure appreciate you guys being here with us today. This is another edition of our weekly real estate backstory. My name is Alan Richardson. I'm going to be the man. I'm not going to be. I'm the managing broker at Maxwell Realty and Realtor Partners. It's my partner.
Good morning. This is Megan Richardson. I'm the compliance broker for Maximum One Realty and Realtor Partners.
And so, we start off today kind of talking about Memorial Day. And honestly, it's very easy to to immediately start off and kind of wish someone a happy Memorial Day. But honestly, you really don't want to wish someone a happy Memorial Day because for a lot of folks it is a holiday. They take the time off, that kind of stuff. But
Enjoy the family.
yeah, but originally this was named Decoration Day, and it was kind of chosen because all the flowers would be in bloom. And that was so that you could decorate the headstones. And it became a national holiday in 1971, and it was designated as the last day of May, or last Monday of May. And this holiday is here for us to honor the men and women who lost their lives fighting for our country. And so this is a time to remember those that
That has gone before us
yeah.
and providing us the freedom of speech, providing us with our family, the peace.
And freedom isn't free.
Freedom is not really free.
So, again, I know it's very easy to just kind of throw out there happy Memorial Day, but do remember what the reason behind Memorial Day is, kind of thing. If you want to honor our veterans, that's Veterans Day. So, all right. So, this week on training, so we this is kind of a preparation week for us, kind of thing. We have our accountability tomorrow, both live and in Zoom in the McDonough office. On Wednesday, we have how to legally and ethically manage your Facebook page. On Thursday, we have the grand opening of our Fayetteville office. So we opened Fayetteville a little bit ago, but this is our official grand opening.
So you want to come by? We'll have some prizes and giveaways,
Yep.
and our vendors going to be there as well. So, if you're new in the industry, if you'd like to know who the affiliate are, it's good to come in and meet them face to face.
Yep.
Wear your mask if you feel, if you need to.
So it's going to be from 11 o'clock to 1 o'clock on Thursday. Like I said, we're having food, vendors, whole nine yards. So please come out and join us. And that is at our Fayetteville office location.
And that's located in 133 Bank Stations in Fayetteville, Georgia, of course.
Georgia. Thanks. In case they didn't know what state we're in. All right. So the other thing that we have coming up, and it's not this week, but starting next week, we have relaunch coming in. And so what relaunch is that relaunch is when let me back
It's
up.
a 25-hour post CE license credit. Not only that, I mean, if you're new, even if you're a experienced agent but need a refresher course, this is a good series and it costs you nothing.
Yeah, Ming and I teach this series, and so we created this class as a way to do two things. One, it does count for 25 hours post license. It also was originally designed to help agents, period, to relaunch their careers. So it consists of and the entire series goes Monday, Wednesday, and Friday for 2 weeks. Starts at 9:30, goes till about 2 every day, kind of thing. We cover a host of things, and so on day one we cover lead generation. Day two, which is that first Wednesday, we do technology and real estate. Day three, we do business planning, where we take the lead generation and we take the technology and we form it into a business plan. The following Monday, we do ultimate buyer. We're working with buyers. The following Wednesday, we do ultimate listing, and we talk about doing listings. And then we wrap up with take me to closing and show me the money. And it's an hour and a half with our affiliate attorney, an hour and a half with a lender. Then they're going to go through and just being able to have some really great questions. And so that is kind of the basis of that series. And so we don't charge anything for you. If you need this for post license credit, it is going to be live and in person in Conyers. This is our new Conyers office, which is just opening up right now. We are not going to be, I can't do relaunch for post-license credit over Zoom. It's just too
So if you
complicated.
are needing the 25-hour CE credit, you do need to come in person simply because the Q&A section and the relaunch portion is more intensive than what we can do online.
Yep.
So, and not only that, you have time to go over some of the stuff and what have you. You know, once again, if you are just getting back into business or you're just new in the business, I highly encourage you to come to this class because what you're going to get out of it, you know, it's like going to school, learning to major in a certain subject. You get all the basic, the definition, but once you get out in the field, it's a total different ballgame.
Yep.
And so these 6 courses is encompassed, so you guys can have that experience of, you know, what it's like. Or, and, you know, also if you're taking these classes out in the past, we update our classes as the market change. So what you took about a year ago or 2 years ago, maybe a little different because our market climate has changed.
Yeah, is the market different today?
Oh, yeah, absolutely.
All right. I want to get on my soapbox for a moment, and we need to have a discussion about how well we play with others. I am speaking to the real estate profession because, we are the real estate profession, and as that, we need to be thinking about profession as a professional kind of thing. I've had some issues going on with agents, and not just here, but across the board. I got a phone call last week from a buyer's agent from another brokerage, and they wanted to accuse my listing agent as well as my sellers of being greedy because they put an offer in within an hour of the property being listed for full price, and it wasn't accepted, and that was not acceptable, and she wanted to call and basically complain. We're seeing kind of this running kind of across the board.
Mhm.
So first of all, let's get some things straight. Sellers are not being greedy. Now, are there some extreme cases? There's always some
Absolutely.
extreme cases, but I can tell you, all sellers are not being greedy. I've seen where agents are posting online and talking about these greedy sellers, these greedy sellers. If you're going to sell your house and you're going to say, you know what, I'm not going to take top dollar for my house, I'm going to take a lower priced offer. When you can do that, then you've earned the right to call sellers greedy. But until then, you need to shut your trap. I'm sorry, it just really, really aggravates me. And all buyers are not desperate. This is not this crazy market where buyers are going to waive every single contingency and not do any inspections. And so, that is also not going to go on right now. We need to, and as listing agents, we need to be explaining that to our sellers that yes, they hold a lot of the cards, but this is still, you can't just railroad over people kind of thing. Listing agents are not jerks. We have to understand that what's going on with the listing agents right now is that the list, especially if you have a listing in a great price point, you're getting blown up. You're getting,
Mhm.
we've seen 50, 70 offers coming in on properties. And along with those 50, 70 offers come a series of 100, 200 phone calls that come along with it, because you only have the buyer, I mean the buyer's agents calling. Sometimes you have clients calling, you have listing, and then any time of any right now, then the offer comes in. Now you got a mortgage lender that's calling as well, just so you can know that their client is good, and I appreciate that. But you got to understand that right now, listing agents, when you have a listing, you're getting hammered right now. So this idea of I called the listing agent and they didn't answer right away. Listen, everyone in the right now is hammered. At the same token, buyer's agents aren't jerks. Buyer's
There,
agents are fighting. As buyer's agents right now, we're having to put in, gosh, 20, 30 offers on a home sometimes before it's getting
for one
accepted.
to stick,
Yeah.
and not only that, put yourself in their shoes, the role reverse is that if you were showing a client 20, 50 homes, and then not getting anyone in sticks because everybody wants cash and conventional. And let me tell you something, some of the games are being played out there where a buyer says that they're conventional, but then switch to FHA. And that's not a whole subject, but anyways, just be courteous. At the end of the day, practice ethically, and also, until you're in the other person's shoes and don't know the whole entire situation of the transaction, please don't point fingers.
We really want to see professional back into the real estate profession. It's time we started acting like the
And
professionals
you
that we are.
guys, VA and FHA are good buyers as well. Don't
Yep.
overlook these people simply because of cash conventional.
Because I can do at the closing table, it's always cash. All right. By the time you get to closing, it's all cash kind of thing. Because, no one's carrying that financing forward kind of thing. So, it's time that we work together and that we understand that everyone is going under a lot of stress. And that if you're in our profession, you know what we're talking about. I don't care if you're the listing agent or the buying agent. There is a lot of stress going on right now, but how we behave and how we treat each other is
Makes a
really, really
difference.
important right now.
Right.
So, people are watching us and we need to behave ethically and soundly, and we need to put our clients' interests always first. So I'll get off my soapbox now.
Okay.
All right. So I wanted to kind of go over, we had some new information out. Goldman Sachs released out the 3 reasons why the housing shortage is going to last for years. And so there's 3 main reasons here. And so the first one here is that the millennials, sorry, I got my hands slapped. And so that, first is that with the millennials in the market, they're adding 1.3 million new households per year. The average millennial is 28, 29 right now. However, the average millennial first-time buyer age is 33. So over the next 4 to 5 years, we're going to see more and more demand from the millennial housing segment.
Yeah, I mean, even with more demand doesn't mean that the price of the house is going to raise, because I think that we're pretty aggressive right now with the inflation of the home, and that can't continue, and especially
Yeah.
with the interest rate start slowly creeping up.
The next thing that they cite is that home building is going to be limited to about 1.5 million starts per year, mainly constrained by the lack of labor and land. If you look at the
And
availability of
supplies,
labor, well, I mean,
materials.
that's in there. But just if you just look at just labor and land, like to take a piece of raw dirt and take it to
Develop it.
final platting, it's 2 years.
Mhm.
And so when you have that, we also have very limited supply of labor, and then all the other supplies that are crazy right now. So it really means that we can only add about 1.5 million homes to the market right now, period. And the last thing is that foreclosures probably won't have a very meaningful impact on supply. The majority, over like 85% of homes that are in forbearance have over $20,000 in equity. So we're not going to be seeing people that are going to be cashing out that are going to be getting foreclosed on.
And
Yes,
that's the
there will
reason
be some,
and I
but
just want to remind you guys that $20,000 is not because they have put any more money into the house or anything. It's just simply the inflation that we're going through right now, and that's what's
price
causing
appreciation.
equity,
Yeah.
right?
All right. So
I
other
got
news.
corrected.
Yeah. Other news that we have this week is that the consumer confidence came in, and our consumer confidence in the last month has kind of dwindled a little bit. There's been some real concerns of inflation and pricing, pricing concerns and things like that has kind of altered consumer confidence. On the same time, our gross domestic product is continuing to be phenomenal. We haven't had this strong of a GDP, and well, gosh, you can
It's been
see
great.
it's really been for a long time that we've seen this big of a jump, and we'll continue to kind of see that. Initial claims came down
Wow.
in employment, and so hopefully we'll see this number come under 400,000, which would be really, really
It's
good.
been over 500,000 in the last few weeks, so
Yeah.
this is a huge jump,
Yep.
y'all.
Or drop. And then Freddie, the mortgage rates dropped again to 2.95. Now we keep saying interest rates are going to be going up. Interest rates are going to be going up. Well, I want you to know that there is some new information. So coming out that really does kind of lead us to support this information, or to support our opinion. And so one of the Federal Reserve presidents, he cited as excesses in the real estate industry as for one of the reasons why the Fed is probably going to ease back on its monthly asset purchases right now. The Fed kind of feels that they've kept the interest rates so low so long that it's creating problems right now. And so there is a lot of support building for the Fed to start having discussions about tapering their mortgage bond purchases. Now, when they do that, our interest rates on the mortgage side are highly tied to the 10-year treasury. And so when the Fed stops buying as many 10-year treasuries, then there's a really good chance that we're going to see that 10-year treasury go up. And when that goes up, interest rates are going to go up. And so right now, the Fed has been buying a lot of those 10-year treasuries, which has really kind of helped us keep those interest rates where they are. But we have to be very conscious that, yes, interest rates are great. They are not going to stay below 3. And I know that we're getting to that point where a lot of our buyers are kind of feeling like, this is kind of how it was. I mean, my parents' first house was at 15%. I mean, 3% is a massive, that is crazy. So we still have a lot of buying power.
Average about $500 to $600 difference in monthly payment, just the percentage.
So huge differences, kind of thing. Now, at the same time, we have some of our lenders are set to resume foreclosures coming up in July. So that's only another month away, a little more than a month away, kind of thing, where a lot of these mortgage moratoriums and forbearance programs are going to be coming to an end. So will we start to see some of that product come into the market? Yes. We will. For those folks that have been kind of riding out the whole foreclosure moratorium kind of thing, that is going to be coming to an end. But I guess the silver lining on that is the majority of those folks have equity, so they're going to have to sell. They're not going to like to sell, but they're going to have to sell. Right now our VA loans are a very desirable product, and we love VA loans. We don't always love VA appraisals, but we do love VA loans, kind of thing. But right now, what's fueling the growth in VA loans is the same thing fueling housing. Millennial veterans are fueling the VA loans. Over 50% of all VA loans now are for millennials or millennial veterans, kind of thing. So just so you kind of know what's going on with that. There's also a new proposal out, and it's for a VA-like housing bill for first responders and teachers out there. And so this is something that the House just put forward, but this is a bipartisan effort where we may see a new loan product coming into play. It's very early on, but just kind of to give you guys kind of like a heads up about it.
There's a chatter about it, but nothing's firm until a bill is out.
But good to stay in the know. So new construction sales dropped 6% in April. As and right now our buyers as well as our builders are kind of, there's definitely some sticker shock right now on both sides. And on the purchase side and on the material side, it really is, this is not, the builders are not driving up these costs. These are legit costs that are coming out there.
$50,000, $60,000 per home as the golden days way back when. They're actually absorbing a lot of these costs. And like Alan said in previous backstory issues, that on the average, lumber has increased by $28,000 per home. So
actually, it's up to $36,000.
Is it $36,000?
It's $36,000. The average new construction home goes $36,000 more.
I feel like the reason why the home buyer sale is falling is because a lot of cancellation from the builder on the new home sale with the previous purchase and sale that was created 3 or 4 months ago due to the material cost, because they can't really proceed.
Yeah. Now, making matters worse is that during this exact same time, and I'm not getting political, but facts are facts, that the Biden administration is looking to double labor tariffs out of Canada. Right now, the Canadian labor tariff is around 9%. And the Biden administration wants to double that up to 18.32%.
Yes, what's that gonna do with the lumber price again?
It's going to continue. And my issue with this is that this is being driven simply by the lumber manufacturers in the U.S. have a big lobby, and they don't want to compete with Canadian lumber. But I think this is ridiculous, personally, because we need them. I mean, right now
We need the materials,
well,
bottom line.
you know, lumber prices are 300% up, and then when lumber prices are 300% up, we're going to double on what it costs to come in from Canada, and Canada is our largest supplier of softwood in the U.S. So I don't have a lot of pull, and if you do, please give Mr. Biden a call and say, hey, please reconsider. But we wanted you to know that there is not a great outlook for what's going to happen with lumber prices. You know, with this tariff, we're looking at lumber prices going up even higher again, and that is already sort of killing us to a certain extent. So please, maybe not please, but just so you kind of know what's going on. Also, at the same time, our big landlords now, right now, there's some really large landlords, you know, Cerberus Capital Management. There's a couple other really big ones, and they have all started partnering up with the iBuyers. So Zillow, Open Door, OfferPad are now going to be where they are not. Well, they have already started snatching up properties before they ever go on the market. So Zillow is going in, buying a home, renovating it, never putting it back on the market, and then turning around and selling it basically off market to these large groups. What's going to happen, and what is already happening, is that rentals are not a safe haven. So if you have folks that are renting now, and they're like, you know what, these home prices are going crazy, I'm just going to rent. That is going to be a real mistake for them. Yes, we know that property values are increasing, but this is not a bubble. It's not like prices are going to go down. If you don't get into the market now, you're going to be behind. This is not where you're going to be buying high and selling low. No, yes, you're going to buy high, but you're also going to be seeing property. I mean, we're seeing price appreciation, and we're going to continue to see price appreciation. Probably not at the same scale that we've seen, but you will still see it. At the same time, you know, the rental market is getting crazy right now. And so the demand for more and more rental homes is coming up. And at the same time, we've seen rental prices start to really skyrocket. So, you know, it's, you know, if you're advising clients, please make sure that you're advising them to get into the housing market. Yes, it can be a challenge at certain price points. I'm not blind to that. But if they wait and continue to rent, all they're going to do is continue to hurt themselves. The path for wealth in the United States is tied into home ownership, and we need to make sure that they understand that kind of thing. Because at the same time, almost half of all renters are planning a post-pandemic move. Coming out of rental into buying these are our millennials, and that's where they're coming from. So we had some new market data that came out. This is all from Redfin kind of thing. And so I just wanted to share a little bit of market data with you kind of thing. Pending sales are up 57% from 2020 and 22% from 2019. Now, the reason we have 2 years of data is, you know, well, last year was a weird year, right? So, you know, it will help us to kind of be able to compare it for not just this year, or I mean, not just this year versus last year, but this year, last year, and the previous year. And that's one of the things I really like is to see, because, you know, we're going to start seeing, and you can already see where like the blue line from last year, where there was a big dip when COVID first hit, and then it immediately started shooting right back up. And so you can see where we're going to start leveling out with last year here at some point. And that's kind of what we've really been waiting for to kind of see. Active listings of homes, however, this is one of the negative side, are down 37% from 2020 and 50%, well, 49, almost 50% from 2019.
And I think, like most clients, you know, for them to purchase another home, they would need to sell theirs. The problem is they can't find inventory to purchase, and so therefore they're a little hesitant in selling theirs.
Well, and the thing is that for our sellers, you know, on one hand, you're going to sell at a really great price. The other side is that you're going to buy on the higher on higher as well, kind of thing. So, all of our sellers are becoming buyers as well. And so, there's both sides of this
No, unless they
equation.
have two homes
Well,
on where
yeah,
go, and
that's
then
true.
they're good.
All right, 58% of pending sales are under contract within 2 weeks. So if you have a listing and you're not under contract within 2 weeks, then
You're
you
too
need to be
high.
identifying what that really is.
You're
At
too
the same
high.
time, 45% of pending sales are under contract within 1 week. Almost half of our listings are under contract within the first week. And you can see kind of where that compares with previous years, kind of thing. That's just amazing to figure that almost half of our listings are going under contract within the first week. Right now, over 50% of homes are being sold above list price. And I want that to kind of sink in, especially for my buyer's agents, because we talked earlier about, some of the buyer's agents who are calling the sellers greedy. Well, if I have multiple offers on my home and these folks want to go over asking, am I going to say, no, I don't want to take these folks who are offering more money? And, in order to win the bids, this is about, competition, and it's a supply versus demand. We have a very low supply and very high demand. And so over half of homes are being sold above list price. So if we're going to go in, especially when you see a hot property go in and it's going to go quickly. I mean, this isn't rocket science. A lot of times we look at, oh, this is a good house and a great neighborhood and a good price. This thing's going to go. And, we need to make sure that we're talking to our buyers right now, that half of all homes right now are being sold above list price. And so going into that, I want you to kind of back up a little bit more and say, well, if half the homes are being sold above list price and my client's max list on max mortgage is $250,000, well, maybe I need to be looking for homes up to 240 or 235, kind of thing. And we have to make sure that we're meeting expectations. But if their max is 250 and they're going to look at a house for
9 out of
250,
10, you're not going to get that. And honestly, if a listing agent lists the property too high, you'll see that property in inventory after a week.
Yep.
And usually when it's after a week, there's nothing being offered at the property, then we all know it's gone beyond the value of the area.
Yeah, and so we are seeing where some folks, there's always going to be a percentage of folks who are going to overprice their property, and the market is still rejecting those folks. But we're seeing the most common strategy right now where you're putting it just below market value and then letting the market kind of decide where it's going to go. Our sale to list price ratio is at 102%. That's the highest it's ever been since forever. Yeah. I mean, you can see where we even last year was phenomenal. Now we're at almost 102%, which is just staggering.
Well, it's an indication what the inventory is doing and lack of it.
Yep.
And the demand for the supply.
Yep. Now, at the same time, one thing, I guess you call it a concern, but Ming and I have been kind of looking at, is buyer regret going to be something that kind of, this has been a debate that she and I have had, kind of thing, is, how many of these buyers are regretting? And honestly, the majority don't regret their sale, don't regret buying it. The majority don't feel like they're don't even feel like they're overpaying for homes. So that to me is good for our profession, is that there's not a massive amount of buyer regret. Is there always going to be some buyer regret? Yes. So there's buyer regret in every market, kind of thing. It doesn't really matter. But just to know that there isn't a ton of it is a little bit more comforting for me.
And what you're going to see sometime, by the way, speaking of buyer regret, just for those of you that are being very aggressive out in the market, please do your client a favor, have at least 1 or 2 day due diligence period instead of 0. Because we're running into issue now with earnest money where the buyer think, oh, I canceled, an hour after I've been accepted. Well, guess what? The buyer's in default. That earnest money, even though it's not due, is still a seller's obligation of what rights to sue the buyer for the earnest money. So please do your buyer a favor. Don't put zero. When you put zero, that's going to get your buyer in trouble if they have second thoughts.
Yes. Good point. All right. Homes with swimming pools are a big deal right now.
Yes.
Ever since the pandemic happened, swimming pools have, it used to be swimming pools were an either or, like you were going to have a house that had one, or there was no way you'd have a house with one. But what we're seeing is that houses with pools on average across the US sell for about $15,000 more than the other homes in the neighborhood that don't have a pool. And that used to be what it is, and now it's about $30,000 more. And so on
Have
average,
you priced out a pool lately?
Oh,
Because that's expensive.
well, I mean, you're not going to get 100% when you
Right.
of the equity when you put in a pool. But that being said, right now, the average home in a neighborhood with a pool versus a home in a neighborhood without one is about a $30,000 increase,
Mhm.
and that's much higher than it ever has been. And we're seeing more and more of
Well,
that.
in the past, pool was looking at as a liability, but because of pandemic, a lot of people had to be creative with their space and recreation. So pool has become a high demand
Yep.
because of that.
So how much does it cost to paint the outside of your house? So Home Advisor, who is they help professional painters and all that kind of stuff, people match up. They said the average price to paint the exterior of a house is right at $3,000. Now it does vary greatly. It's somewhere between $1,000 and $6,000, but the average is right at 3,000. You know, one of the reasons for that big swing is two-story homes are always going to cost more than one-story home. If it's made out of stucco, it's much harder to paint than other ways. If it's concrete siding versus some of the other sidings that are damaged and don't take weathering as well, that kind of stuff. The average cost to paint the inside of a home is right around $2,000 on average, which averages about $350 a foot. It's kind of one of the easy ways to kind of calculate it out there. And so, these are just numbers that we wanted you to have as we, just so you're aware of what's going on in our market. There's also we had a new. I just want to share with you what are the top open email subject lines, kind of thing. So there was a company called Active Pipe, and they do email marketing, and they said, what are the top, and they went and they did a study for real estate on what are the top subject lines. And so these top subject lines, and I love them. So the first one is just sold in your area. Second is real estate market snapshot in your area. Number 3 is, have you been wondering what your home is worth? Now, number 4, list now or later. Why the summer market pays dividends. 6 steps to getting your home ready for a listing, and thinking about a vacation home. Those are the top 6. But these are what I want to encourage you is to not just use these for email. Because are these not really great can you send this as a text message? Yes. How about a social media post? Absolutely. How about you do a video on this and then share it out on social media, shoot it out to your database, that kind of thing. So,
All day.
Right now, business is booming, but we're always recruiting and marketing and really putting ourselves out there. And I just love these, and I wanted to share those with you. So if you need some me time, you can meet up with us afterwards at maxone.rock/chat. We'll always hang out for a few minutes afterwards. And I hope that you guys had some great value, and I hope that today was a good time for you.
And just remember, we're honoring the veteran or the Memorial Day for those that has come before us.
All right. Well, call, text, smoke signals. We answer it all. Hope you guys have a wonderful Memorial Day.
Happy Monday.
All right. Bye.